Hello, my name is Aliyu Justunia. Uh, Today is day two of the 30-day series where I promise to teach you forex trading from zero to hero using the ICT trading concept completely free. In today's lesson, we will start with the basics of chart reading, which include candlesticks, time frames, market structure. These are very important foundations every trader must understand before moving to advanced ICT concept. So stay focused, take note, and let's begin. Um, this is our chart. If you take a look, this is what the chart look like. As you can see, the way it is like this. But don't be afraid. I'm going to, take one chart from the green and take the second one from the red and explain. Because if you take a look at these candles, like they are like two in two colors, blue and green and red. So it depend. It is me that leave my color like this. If you like, you can just change the color. What matters is the candle that is going up and the candle that is coming down. That's what matters. So we do have two types of candles. We have bullish candle and bearish candle. Bullish candle is the candle that is going up, and bearish is the candle that is coming down. So what I'm trying to say is that all these one items that you are seeing, we call them candles. So this bullish candle, as you can see, it start from the bottom, as you can see, and it has like two parts. It has what candle body, like this is the candle body, and as you can see, there is one line, that is this line, we call it wick. So this is the opening candle wick, like and this is opening candle body, like it start from the bottom, as I said, and this is candle body, this is body, and this is closing candle body. I think I made a mistake. This should be closing candle body. I don't know if the spelling of this week is even correct, but week, yeah. So this is closing candle body, and this is what closing candle wick, because it closed above. And for bearish, it start from the top to bottom. So as you can see, this is the opening candle wick, and this is opening candle body, and this is what candle body, and this is closing candle. It should be body here. I made a mistake here too. Body should be body, and this is what closing candle wick. So start from the top to bottom, but this one start from the bottom to top. That's how they are. So if you go back and take a look, like every green one, like it going up, and anywhere you saw red is it coming down, as you can see like this. That's how it's working. So this is what candle is all about. So don't be afraid by mere looking at these things. So this actually the anatomy of the candles. So that's it. So the second thing is we are going to talk about market structure. Or before talking about market structure, we should talk about time frames. So time frames, for example, these candles that you are seeing, every candle is representing the activity for entire 4 hour that happened. This is what this one candle represent. If you will change it to maybe daily, is the same. For example, how many 4 hour do you have in one day? I think it should be around six. I don't know. I'm not sure, but it should be around six. So if you can, just mark like six candles here and change the time frame to daily, you will see like this red box that this thing become just one candle, as you can see. daily, it representing daily activity. And if you go back like and sketch only one candle here, let's sketch only this candle. Let's draw only this candle. So if you go back to like 1 hour, like you will see it should be divided into four. I don't know. It should be. Let's try to do something like this. As you can see, cover four candles. The reason why it on top of this fifth one is because even from the 4 hour, as you can see, like the box is on, So as you can see, like now, each candle represent 1 hour activity. So that's how it is. Monthly, if you change it to monthly, like every candle here represent monthly activity. The same thing for weekly. Every candle represent 1 week activity. The same thing with daily, the same thing with 4 hour, the same thing with 1 hour, the same thing with even 1 minute. So like the more you are, like the more the higher time frame, the more like you are like zooming in the chart. And if like the less time frame, the more you are zooming in, no, okay, zooming out the distance. So that's how the time frame works. I think there is no much explanation on that. And we talk about the candles, introduction to candles. And I just tell you about the time frame. So the next thing that we are going to discuss it, market structure. So this market structure, even though it looks simple, but it's very, very important, because if you do not get a market structure correct, everything is not going to work for you. This market structure is the foundation of your analysis. Make sure you understand this market structure. So market structure, we have three types of market structure. As you can see from this, we do have uptrend, and we have downtrend, and we have consolidation. So uptrend, like, it is the structure that this type of candle is creating, that is bullish candle. And downtrend is a type of structure that this bearish candle is kind of creating. And so as you can see from here, I have this, I draw this. So market is not going up straight, like it's going, in zigzag. As you can see here, this is what we call a retracement or pullback. Then this move is what we call impulsive move or displacement. So as you can see, when this displacement happen, like it kind of, this supposed to be something like this, supposed to be something like this, something like this. So as you can see, we have high here. But when this impulsive move happen, like it kind of break here. So that's why we call this break up structure. As you can see, this is the full meaning, break up structure. But the abbreviation is BOS. So as you can see, this is how the market is going up. Impulsive move, pullback or retracement, then another impulsive move, then it will pull back, then do another impulsive move, like this. So that's how the market is moving. So that's why you can see break up structure, break up structure, break up structure, break up structure. Market is going up. This is what we call uptrend, or what, bullish trend, uptrend or bullish trend, as you can see. Then the second thing is that is what we call what, um downtrend. So how downtrend is going to start? As you can see here, like anytime this market do a retracement, like make a retracement, so the retracement doesn't even come here. Sometimes even if it comes here, it will not pass this level. It will just stay something like this. But this time, when market do this impulsive move, market as it coming down at is trying to create retracement, instead of maybe somewhere from here market just reverse something like this, something like this. Maybe market reverse and break here. Then market decided to even come down here and break what? And break what? Break this low here. When it break this low, that means market is trying to change direction. So we call this change of character. This is the full meaning, change of character. The abbreviation is, CHOCH. That's the abbreviation of change of character. So market create a change of character to the downside, then market. So now, since market already changed a structure, so we are not going to continue calling this impulsive move. This is a correctional move. Okay, not correctional. This is a pullback or retracement now. So this is impulsive move to the downside. Then this is pullback. This is impulsive move or displacement, and this is pullback. This is another displacement. So as you can see, market is creating break up structure to the downside. That means market change from bullish to bearish. So that's how the market is it working. And at the same time, if maybe from downtrend to uptrend, if it want to change maybe from here, it will just give us change of character. That's when we will know, okay, market is going to change from bearish to bullish. Change of character. So this is two types of structure that we have. So I think let me just remove this one. So we have uptrend and downtrend. These are the two types of market structure that we have. The third one is consolidation. One market is not uptrend and it is not downtrend. That means market is just moving in one direction. The market makers, they are not sure of are they going to buy or they are going to sell. So in this situation, just avoid the market. Avoid market if market is consolidation. You saw market is consolidation. That means you don't know where market is going. But there is some cases that you are going to use consolidation. But for now, I'm not going to confuse you with that. So for now, the only thing that I'm going to tell you is if market is consolidation, just stay away from the market. So when we are doing a top-down analysis, so I'm going to tell you exactly when you need to use consolidation and when you don't need to use consolidation. I don't want to do that explanation now, but for now, anytime market is doing consolidation, just stay away from that market. So this is the three topic that I want us to cover today. The first thing is candlestick. The second one is what? Tell me. The second one is time frame. The third one is market structure. So these are the three topic that we going to discuss. We have already discussed today. So let's look at our table of content. I mean, not table of content, course outline. So as you can see, we talk about introduction to candlestick and time frame, and we talk about market structure. So I think the next in our next class we are going to talk about this element of price setups. So it is some keyword that we traders that we are using, like displacement, impulsive. I'm going to explain all of them to you in our next video, in my next video. So this is going to be the end of today's class. So bye. Sorry, I forgot to tell you, if you really want to, if you are enjoying this class and you wanted to be getting update, subscribe my YouTube channel, which is Aliyu underscore Gistonia, and also follow me on TikTok, which is the same username, Aliyu underscore Gistonia. And the last thing is, don't forget, go and follow me on Instagram. That is, join my Telegram channel. So, as I said yesterday, there is something that I'm going to be cooking there, which I'm very, very sure you are going to like it. So, make sure you join my Telegram account, my Telegram channel. So, see you in our next class. Bye.